Hi, everyone. It's Matt Curfman and Oliver here to say hi for a update of Matt's Minutes as we head into the month of October. Oliver had a lot of important things to say, so he wanted to jump on camera and say hi to you all. One, we hosted a really fun and interesting and creative AI and apple pie event. Locally, that went really well. We're going to have a Talk About Medicare event coming up also in October, which is going to be sent out virtually, live recorded as well. So make sure and check that out. And then what's really happened and what's going on in the world right now is if you look in the last couple of weeks, one, the Federal Reserve has lowered rates for the first time in quite a while. And so, from a market and technology standpoint, an investment standpoint, typically lower rates sometimes get better outcomes in the market because the cost of capital is cheaper. When I say cost of capital, that means to borrow or lever. Think about mortgage rates eventually coming down, car loan rates coming down, things of like that nature. So, with that in mind, I just want you to be aware that lower rates can be a good thing, can be a bad thing. But the lowering rates for investors is not typically a good thing as far as cash and safe investments. Usually, safe investments end up with lower yields. So that's something to be aware of. We are currently, while I'm recording this, in the middle of yet another government shutdown with debates. I don't know if I can call them negotiations back and forth. If that were to extend for a significant period of time, we do think that can pose a risk to the markets and the economy. The other thing we're still seeing on headlines is AI, artificial intelligence, and how much of an impact it's having for organizations who are embracing it, not to take over their workforce, but to basically use human capabilities and use AI as kind of a thought partner and kind of mold the two together to gain efficiencies on some of the things that we already do operationally. And so that is something we are still seeing out there continue to drive the markets. If you're to look at all 11 sectors of the market, technology is one of those. And we think it's important that we have some exposure there within the market side of your portfolios. So I think the bigger question overall, and we'll refer to this because I've used it all fall, but my short video I created on the tale of three markets, and I talked about a rising market, a falling market, and then a V-shaped market. And then what happens in each of those when you're in a buy and hold strategy versus a safety net strategy. And so the answer is going to just come down to what is the right fit for you. Buy and hold can do well, but it also can be much more volatile. And so you're certainly welcome to take more risk in a buy and hold. If you're retired and you're not adding to your pot anymore, there's been a lot of concern this year about what happens next with tariffs, with trade war, with inflation, with the Fed, with, over the summer, there was headlines of nuclear war considerations or thoughts. Even that it made a headline is a little scary and nerve wracking. So we just want to let you know there is choice, there are options as far as your investment portfolio through Fidelity. If you are in some other safer assets, whether it's a money market, a CD, maybe some corporate or treasury bonds, and then also like a fixed indexed annuity that has some safety nets on that. Those are going to be on the lower threshold, and we feel real comfortable with those as part of an overall portfolio matrix. So we're still keeping an eye on everything. We are here to educate, inform, and guide you no matter what the world throws in our path. I thank you for being part of Richmond Brothers and part of our lives. We're honored to have the opportunity to serve you. As always, if you have any questions, please reach out to questions@richmondbrothers.com, and we will kind of keep you apprised as we head into the end of the year. Oh, one last thought. Just kind of be mindful of the updates for the big, beautiful bill that passed as far as taxes. So we now know where rates are going to be in 2025, 6, 7, and 8. And there are some income thresholds for married, filing, joint, or single. If you're over 65, you want to kind of be cognizant of relative to that. So again, let us know if you have questions, and thanks for tuning in.